All right. Welcome, guys, to another episode of Brian's private webinar. Okay. And in this episode, all right, we're going to talk about the steps to becoming a 6 and 7 figure trader. All right. And these are steps that I kind of rewired and reverse engineered in my brain to figure out how to give it to you guys in a smooth PowerPoint, especially if you're a beginner, intermediate, advanced level trader. I basically want to go back in time, if you will, and figure out like, what did I need to do? What are the steps I need to take in order to really become a 6, 7 figure trader? What is it I had to do? What were the most important things for me? Okay. So I kind of wanted to do that with you guys and take this walk with y'all. All right. So of course, it's by me, Ryan the Freitas, at Ryan Grinds on all social medias. Follow me. Let me know if you enjoyed the webinar. It'd be greatly and immensely appreciated. Okay. So let's start. Let's have some fun. Okay. So here we go. Number 1, mastering your charts. Okay. Mastering your charts. So trading is extremely abstract. All right, guys. And I'm sure you guys already understand this because when I see a buy, some of you see a sell. When you see a sell, I may see a buy. When someone's buying, someone's selling. Okay. So there's always going to be a discrepancy of people with the same outlook. There's never going to be the same person seeing the market the same exact way as you. It's really like art. It's actually a beautiful thing because what I see, probably no one else in the market sees the market like how I see it. There's people who see it similar, maybe even 90% like me, but I can guarantee you no one sees the market like me because they don't have the same experiences that I have in the time that I've accumulated trading for 7 years, right? Same thing with you. Doesn't matter if you've been trading for 7 months or 7 years. No one is going to have the same exact experiences as you. Okay, so there are a few things you need to know when it comes to mastering your charts. Okay, because this is step 1, right? We're talking about steps to become a 6, 7 figure trader. Step 1 is mastering your charts. Nothing else comes before the charts, right? When you get in the game, you're like, oh, how do I understand a candlestick? How do I understand candlestick patterns? Oh, what is a lot size? Oh, like I just want to make money. So really it's the technical side of trading that you have to kind of master first, right? Without that, you don't even have a good base to do anything else. And that's where everyone starts. You probably started from someone posting a Facebook post or a YouTube video saying, hey, I flipped $50 to 2,000. Woohoo. And you're like, wow, I want to do that. And you didn't realize how hard it'd be. Yeah. Joke's on you, bucko. All right. So let's dive into it. Okay. Oh, chill. See, I messed up. Sticking to one strategy or mentor for at least 3 to 6 months. Okay. So what I want you guys to realize is that number 1, most of y'all are bouncing from strategy to strategy, company to company, group to group, and you're not having success. Okay. There's a reason for that. You think I didn't do that? I did that. Okay. I did that. Any mistake that you've made, I made 10 times. Do you understand? So you don't have to heed my warning. You don't. I'm just speaking from experience. You know how your mom and dad speak to you and it's from experience, your grandpa, and it's like you don't want to listen because they're old, but they got the wisdom that sometimes you reflect a year or 2 or 3 years down the line, you're like, damn, I should have listened to grandpa. I'm grandpa. Do you understand? I'm the light-skinned grandpa right now for you. You're gonna listen, you're not gonna listen to me now, but a year from now, you're like, damn, I should listen to Ryan. And I'm like, yeah, it's okay, bro. I understand. It happens. Okay, so listen to me. Most of you guys are bouncing around from strategy to strategy, group to group, every 2-3 months, and you're never going to get consistent like that. Never. Do you understand? You have what they call the shiny ball syndrome. Oh, look at the EA. Looks good. You start doing that. Oh, look at the sexy little indicator. Oh, you start doing that for a little bit. Oh, I got binary. Oh, Nadex. Oh, Forex. Oh, futures. Oh, you're bouncing around. Okay, I don't want to use a different word that I want to use, but okay, you're being promiscuous on these charts. Okay, you're doing things with a lot of different people. Okay, and you don't have one person that you're securing the bag with, that you're loyal to, that you're locked in with. Hello, somebody. Okay, why you always leaving? Why you know that song, y'all? Why you always lying? This is what I thought about. Y'all always leaving. Okay, half of y'all are always leaving group to group to group. Every two, like, look at your Telegram right now. If you got like 10 different groups you're in, it's probably a problem. It's probably a problem that you're in 10 different Telegrams with 10 different groups with 10 different mentors, 10 different strategies, and you're trying to learn 10 different things. I'm being real with you. Okay, you're not going to see success this way. This is number one, mastering your charts. How are you going to master your charts? Stick to one strategy, stick to one mentor, stick with that for 3 to 6 months. Now, here's the thing. You have to make sure your mentor, whether it's me or not, I don't care. I'm just saying you need to make sure that they are reliable. You need to make sure that they have results. You need to make sure that they can teach you. Do you feel me? A lot of mentors are going to scam you. There's a lot of mentors who can't trade for shit. Okay? I'm trying to tell you. All right? So they're going to charge you and they're not going to teach you anything. Right? That's actually worth the value because they don't even have results that you're looking for. How are you going to learn from someone and they don't even have the results you want? Okay? I don't understand, but somebody help me understand. Okay? If I want to make $10,000 a month, why am I learning from you who are only making $500 a month? Hello. But hey, I'm just light-skinned grandpa talking to you right now. Some of y'all gonna listen, some of y'all not. Okay, don't bother me none, all right? But I'm really trying to give you guys a game. Okay, this is sometimes more important than even the charts and the strategies and stuff I'm gonna teach you in a little bit later, like on the charts, okay? This is you sitting down, buckling down, be like, yo, I found 1 or 2 people that I really like, or 1 or 2 groups. I would say 2 mentors or 2 groups max that you really like. Okay. And you buckle down and you study that. And you don't steer away from it. All right. So, I'm going to get off my little horse here. All right. So, buckle down, stay focused for 90 days. Do y'all hear me? Buckle down and stay focused for 90 days. That's what you need to do with whatever strategy, whatever mentor, whatever. Number one, I already went over it. Stop bouncing around from company to company, group to group, mentor to mentor, looking for the holy grail strategy. Right? Easy. Number two, cure yourself of the shiny ball syndrome. That just means oh, this looks good. Oh, this looks good. Oh, I got to do this. No. You don't. What you need to do is sit your butt down and back test. What you need to do is sit your butt down and study. That's the only way you're going to get good at this game. Everything that glitters isn't gold. Okay, so just because someone claims, hey, my EA is 100% accurate, you put in $1,000, by the end of the year, you'll be a millionaire. Woohoo! And you fall for it. But you know what? Back in the day, y'all, well, I didn't fall for that, but I fell for some dumb stuff too. I fell for some dumb indicators and systems that I thought were really good, paid thousands of dollars for it, maybe like 800, 1,000, and they were trash. They were trash, right? But I didn't know any better. I was just looking for something that would work. But what you need to do ultimately is trust yourself and the process. Because the best tool for trading is your eyes and your mind. Okay, for you to see the charts and your mind to decipher what the charts are doing. Nothing, no indicator is going to replace that. No mentor can teach you that. You have to put in the work. There's nothing that I can give you. I can give you signals all day long. If y'all look on my signals Telegram, look how accurate I am. I'm not even bragging, okay? But, well, maybe I'm a little bit. I'm a little light skinned, so it's coming out a little bit. But I'm saying some people are paying for signals, okay? And my free signals are shitting on their paid signals. And some of y'all are paying $100, $200 a month, okay? And I'm giving them for free, right? Now, what got me to that point is I had to study and trust my own process. If someone had $1,000 day, I didn't care. If someone had a $20,000 day, I didn't care. I had to backtest and master myself and master my own charts. Simple as that. Nothing is going to replace you putting in the time in. This is not a get rich quick scheme. Okay? Trading is hard. Okay? It is. Maybe, I probably shouldn't say the word hard. Let me say difficult. Okay? There's a reason why 99.999% of traders don't make money. Okay? But it can be simple if you actually study. Okay? Something you have to put time in, you have to put chart time in. Nothing's going to replace it. Number 3, focus on one strategy, master that strategy before moving on to a different strategy. We spoke about that. Cool, let's move on. Number 4, believe in yourself. Obviously, I just said that. Stop worrying what everyone else is doing. Just like I said, just because someone had a 1K day and you didn't, doesn't make you any less of a great trader. Run your own race. Do y'all hear me? There's gonna be days some people make 5K, 10K, 20K, and you're like, Dad, why? How come I make 2K today? I got bills due. And what are you doing, bro? What group are you with? And can I join? And see, that's where you're going. You can't even focus for 90 days. If you focus for 90 days, I guarantee you're going to see results with the correct mentor, the correct strategy. And also, even if you don't have a mentor or a group or anything like that, but you just buckle down and study for yourself. Okay? For yourself. Give yourself 90 days. All right? So let's talk about a different subject. Let's move on from that. Let's talk about Forex pair mastery, because this is still mastering your charts, right? So mastering your charts now kind of has like a subset group of Forex pair mastery. So each Forex pair has its own natural tendency and should be traded correlating to its own session time. Some of you guys already know that. I'll break that down to you guys for those who don't know that. As a trader, you need to figure out what pairs best suit you. Every trader is different. And the same pairs that work for me, for moi, may not work exactly for you. Okay? It may not. And the reason being is because we may have different schedules. I may be on a different part of the world. So I can't expect you to trade what I trade, how I trade it. Okay? This is why I need to understand your trading style. Scalp, intraday, swing, and trade according to the pairs that best accommodate your needs. Okay? Now, it can even be a hybrid of scalp, intraday, swing trade. It doesn't matter, guys. Okay? You don't have to think things set in stone, like, oh, I have to be a scalper, oh, I have to be intraday, or I have to be a swing trader. I know people who swing trade and scalp. I know people who just super scalp. Right? I know people who are just solely intraday traders. And then I know people who swing. I'm talking about the swingers, the people who trade for 4, 5, 6 months and hold on to a trade that long. You understand? Like what banks do. Like there's people who do that, right? So only you really analyzing your style of trading, what comes easy to you, you're going to understand what type of trader you are. Okay, because this is going to be very relative to how you trade, your trade style, what pairs you pick is your trade style. Are you a scalper? Are you an intraday trader? Are you a swing trader? Okay, so what is a scalper? A scalper is someone who's really going in and out the market, maybe for 5, 10, 15 pips at a time, right? Maybe you're intraday trader. Like myself, I'm kind of like a hybrid though. But an intraday trader is someone who will try to hold a trade for the majority of the move of that session. So let's say we get an AU and Asian session. I'm probably going to hold it for a couple hours until Asian's done. Or if it keeps going into London, I'm going to keep holding it. But I'm not going to hold it into the next day and then the next day and then the next day. I'm not doing that. Intraday trading, meaning it's throughout that day. And then you have the swing traders who are holding it for multiple days, maybe sometimes a week or two or more. Okay. So this is all about Forex pair mastery, just knowing yourself, knowing what type of style you have as a trader is very important. Okay. And understanding what pairs work for that style. Okay. So now there are 3 main sessions for Forex traders. As you guys know, there's Asian session, right? Which is roughly, now this is a rough estimate, okay? 6 to 11 p.m. Eastern. That's like Asian session. Okay. Then you have London session, which is roughly around 2 a.m. to 8 a.m., right? Into New York. Then you have New York, which is 8 a.m. to 5 p.m. Eastern. Okay. Now, based on what type of, well, I would say, first of all, what time zone you're in, you're going to pick the session. Okay. Now, for me, I'm on the East Coast. So New York session works really well for me. Okay. It's like my main session. But as you guys know, lately, what have I been trading? London Dundon. Okay. She's been lovely to me. All right. So it's been a little rough for me because I'm up until maybe 3 o'clock a.m. I'm up from maybe midnight to 3 a.m. trading London, but she works really well for me and the pairs that I trade around those times. So number one, what you want to do is figure out what's your schedule like, whether it's your work, kids, whatever, and figure out what sessions are best for you. Then you find out what pairs work best for those sessions. Right? So if you're going to be a New York session trader, figure out what pairs are going to be best for New York. If you're going to be a London session trader, figure out what pairs are going to be best for you in London. If you're going to be an Asian session trader, figure out what pairs are going to be best for that session. Now, this may seem simple, and this may seem like, no, this is like baby stuff, Ryan, but you would be mind blown how many people don't even correlate this correctly. Okay? And I was one of those people who didn't for a long time because I didn't have a mentor and I didn't have a light-skinned trader yelling at me on these webinars like y'all do. Okay? I didn't have that. Luckily, y'all do. Okay? But seriously, I would trade whenever, however, whatever pair, all that. So we're going to put some discipline and we're going to put some restrictions on your trading that's going to make you better. All right. So let's move forward. Just so you guys can see the visualization of the market times. Okay. Frankfurt and Paris. That's basically Germany. Okay. So this is 1 a.m., 2 a.m. All right. So we're starting here. It's like 1 a.m. Okay. And so as you see here at 2, like the Germany, the Frankfurt and Paris market open, right? At 3, London. So basically around 2 into New York, which is like 7, 8, 9, 10, right? You have the London session. Okay. So you can really trade London, right? I even trade at midnight, guys. If you want to be early for London, you trade around midnight, 1 o'clock before the open right here. And you'll see the volume kick in around 2, 3 o'clock, right? And then we have around 8 and 9 o'clock. We have the New York pairs, right? So we have New York here, we have Chicago, we have all these markets opening around this time, around 8, 9, 10 o'clock. Okay, and that's where New York, a lot of USD pairs start to move. Makes sense, right? Because USD that's the pair that is going to move around that time, obviously, because that's when we're up. That's when our markets are moving and a lot of buying and selling and commerce is being done in the United States. Then we have roughly, this is like what, 6 o'clock? No, hold on. 4, 5, 6, yeah, right. So, but this is around Asian, or I'm sorry, not Asian, Australian, right? So we got Sydney, Australia, Tokyo, Hong Kong, Singapore. So this is Asian session starts to hit right around 5, 6, 7, 8 o'clock. So that's when the JPYs, the AUDs, the NZDs, all those things start to hit because these markets start to open up during those times. Okay, so should you be trading JPY Tokyo stuff around New York? Really, no. Now, here's the thing. Can you make money? Yes, but is it the optimal time to trade a JPY pair? No. Okay, no, it's not. Same thing with USD. Okay, if we take Euro USD, are we going to trade Euro USD in Asian? Are we going to take a mainly New York pair and a London pair and we're going to trade it in Asian? No, we're not. So just understanding the pairs and when they're going to move will drastically help you eliminate bad trades. Okay, if you notice, a lot of my pairs, go back to the signals list, right? If you notice, a lot of the pairs that I trade, which is around London, are London-based pairs. A lot of GBP AUD, Euro AUD. You'll see a lot of those in there. Maybe around New York, you'll see AUD USD. Sometimes you might see it in London, but barely. Okay. So you'll see a lot of those pairs all the time because I'm in London. So I'm going to trade the London-based pairs. Okay. Very simple. Not going to harp on it because it's a pretty simple concept, but I had to go over it because a lot of people don't understand it. Okay. So number 2, well, we're still in mastering your charts, right? But the subset of that, the technical analysis mastery, right? This is, again, still part of the game. All right. You have to understand technical analysis. So not just the Forex pair and all that type of the technical analysis, right? This is where it starts. This is where it's fun. This is what everyone likes to do. Everyone likes to look at this chart and say, this is what I want to do the rest of my life. I just want to look at this candle and see if this thing goes up or down. And I want to be able to call it if it's going to go up or down and make money and sip my pina colada, kick my feet up, and make millions. And we all think it's that easy when we first start. And what we realize is that it's not that simple. Let me take a sip of water because it ain't that simple. Okay. But that's what we all think. Now, what I want you guys to do in the chat right now is I want you guys to tell me because this is interactive. You know I love being interactive. I want you to tell me, do you see a sell here or a buy here? Oops. Whoa. I hope I didn't mess it up. I didn't mess it up. Thank the Lord. Do y'all see, what do y'all think is to happen here? Now, honestly, you don't have a lot of, I would say, confluence to really know. So if you're wrong, you're wrong, right? Who cares? But just off the gist, all right, just look at, this is the 1 hour time frame AUD/USD, my favorite pair if y'all don't know. Okay. And this was actually recent. This was in September. So don't cheat. Okay. I shouldn't have said that. But is this a sell or buy? Do you think this is going to continue up? Or do you think it's going to go down? I need you to put in the chat. Buy or sell. Buy or sell. Buy or sell. Buy or sell. Okay. I think I have the poll. I do have the poll, but I ain't set it up. I didn't do my due diligence. I could have. Oh man. I could have did the poll and everything. Dag. All right, I'm slacking, but it's cool. Okay, so I'm seeing in the chats buy, sells, depends on your scalping swing. Great deduction. Down. Consolidating. Okay. Felicia said I would look at the higher time frame to determine if it will continue to buy. Okay. All right, Felicia. Okay, buy. I don't say sell. Okay. All right. So, all right. I'm just asking, and honestly, none of you guys are really. I don't say. Well, yeah, some of y'all are wrong. I'm not gonna sugarcoat. Okay, I'm not gonna sugarcoat here. All right, I'm not one of those guys that's like, hey, everyone wins, everyone gets a trophy. You're in like 15th place. Here you go. Be happy. I'm not. I can't get jiggy with that. All right, you either come first or you last, bro. You win, you lose. You understand? You lose, you take the L, take it to the chin, you come back and you try to win. Yeah, I'm not with the whole everyone wins type of stuff. That's not how life works. So some of y'all lost. All right. It's cool. It's cool though. I want you to learn from it. So AUD/USD drops. Okay. Now, looking at it, okay, I can see why a lot of you guys would indeed buy. I mean, it made a lot of waves up, right? Started to consolidate, possibly another wave up. But for a lot of you, right, maybe you saw the sell because maybe what you saw was, hey, this was just like what I said, a lot of waves up. 1, 2, 3, made a double top, a 3-wave structure here. So we have one wave, 2 waves, 3 waves. And at this point we have, right, we have a lower high being made, neckline being broken. And as you can see, now the market starts to drippity drip drop. Now, if you didn't see that, that's fine too. All right, because maybe you would have known just from, like, I forgot who said it, but she said, I'd look at the higher time frame. And that's really the most correct answer, right? Look at the higher time frame, and that's really what's going to show you what the market's going to do ultimately anyway. Okay. But the reason why I gave this example, guys, is because technical analysis, mastering technical analysis is the first step. Okay. If you're not even, I would say 60 to 70% accurate, you're doing something wrong. Okay. So if you're not looking at charts and most of your trades are wrong, right, and most of your analysis is wrong, you need to work on that ASAP, because it don't matter doesn't matter. You can work on whatever, psychology, risk management, it doesn't matter if your charting sucks. Okay, let's not replace everything else, the emotional discipline and risk management, compounding and all that's fun, with actually being good at the charts. Because if you suck on the charts, then you don't even have a good base to do anything else. Okay, so what we have to do is get good at technical analysis, right? That's the first step. Okay, and again, these are just the steps to becoming a 6-7 figure trader. You have to. So I'm trying to get you guys into my brain, right? The first thing I had to master was this: technical analysis. Okay, let's go into it really quick. So basics to technical mastery. Number 1, what you want to do is study my Forex 4 Pillars of Success YouTube video. Go back to that. It's on my YouTube. You need to go look at that, because I went over candlesticks. Okay? You need to study candlestick patterns, and you need to backtest candlestick patterns. Okay? So I'm not going to go over a whole candlestick, encyclopedia with y'all. I'm not doing it right now. It's going to take too much time. but you need to understand candlesticks, candlestick patterns, candlestick formations, right? All that type of stuff. So if you need to do that, go back to my video and then you can search Ryan Grimes on YouTube, Forex, 4 Pillars of Success. Okay, there's a section there. I don't know where exactly, but but it goes over candlesticks pretty in depth for like 20, 30 minutes. Okay, that's number one. That's going to be a base. Again, this is technical mastery. Number two, learn to backtest, 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 backtest. Okay, and we're going to do that together. We're about to get to some charts in a little bit. Okay, it will help sharpen your skills week by week and understand the markets with more clarity. Okay, I tell my students all the time, there's nothing that's going to replace you backtesting. You have to backtest. Even if it's just 15, 20 minutes a day. All right, even if it's, look, I don't even care if it's 10 minutes a day. At least you're putting some consistent results. Now, I don't know how far that's going to get you, being real, but what I would prefer is that you take some time out of your week and you just backtest for a good hour, 2, 3 hours. Even if you do just that, you will see significant improvement. And so what are you backtesting exactly? I'll show you how to backtest, okay, in a second. I'm gonna go through live charts with you and backtest with you, do a lot of different things with you in a second, okay? So then I want you to pick the pairs that work best with your job schedule, your kids' schedule, and time zone. Just like the mastery I was telling you about with the pairs, right? You have to understand your situation. Some of y'all live in Australia, some of us live in US, some of you guys live in Dominica, right? Some of y'all live in London, some of y'all live in Aruba. You have to figure out your job schedule, your kids' schedule, if you have kids, your time zone, figure out what sessions are best for you, all that. And then lastly, which I already reiterated, you stick to one strategy / one mentor, max two, okay? I recommend one at a time, okay? And you stick with it at least 3 to 9 months, or I said 3 to 9, 3 to 6 months, at least, before moving on to another strategy. So it gives you time to really master that strategy, okay? But if you want to stick to 2 strategies, 2 mentors, that's perfectly fine, but I would not really go more than that. I would not, okay? So next part, all right, is mastering your risk management, okay? For this portion of the webinar, let's go to some live charts. We'll look at some good examples of proper risk management, right? So that you understand what it's like to get proper risk management on your trades. Okay, so we're gonna just go to live charts right now because there's a lot of different things I want to show you guys. All right. And I think it'll be a lot more beneficial to look at charts. Excuse me. Okay, because I'm sick of looking at PowerPoints right now. It's like, what, 30 minutes into the presentation. Okay, y'all want to look at charts? I want to look at charts. Okay. So, all right. So what I want to show you, of course, what we're going to do is look at my favorite pair. As y'all know, ADUSD, it's a prime example because it's my favorite pair. Now, if you want to copy me and start trading ADUSD all the time, that's fine. Because guess what? I'll share her with you. She's mine, but I'll share her with you. Okay? I'm not a stingy fellow. Right? She loves everybody. She just loves me more, but she loves everybody. Okay? So I would even advocate as a new trader or even an intermediate trader to start with AUD/USD because AUD/USD is a very smooth pair. It's one of the slower pairs, but it's one of the easiest pairs to read, okay, as far as market structure and as far as price action. Okay, and just this is a huge cue or can be a huge light light bulb for some of you. Okay, sticking to 1 or 2 pairs that move easy. Stop trading GBPs and US 30 all day and Bitcoin, thinking you're gonna make millions doing that. Sorry, bro. You can't even be consistent with AU. I don't understand how you're gonna slaughter US 30 and Bitcoin and silver and that. But that's what you're trying to do, and there's nothing wrong with that. But you have to crawl before you can walk, and you have to walk before you can run. So I would say to start here. Right. So what I want to show you guys again on these charts was a plethora of things, starting with risk management. So let's type it out together. Okay. There's a couple things that I want to do with you guys. Okay. So number one, we're going to look at risk management here. Okay. Hold on. Let's number one. We're gonna look at risk management. So this is when it's gonna get fun because it's gonna get easier, right? PowerPoint presentation is kind of gonna be over. We're gonna just be looking at charts now and good setups and stuff like that. Okay. So now, compounding. You guys wanted that as well too, right? We're gonna look at that. Okay. Then we have, compounding is kind of entries as well. I was gonna put entries, but we'll put entries. Okay. And then we'll put, and then we're also going to go over pair mastery / time correlation. Okay. So these are the things that we're going to go over really like all together. All right. So we're going to go over risk management with your trades. We're going to go over compounding and getting in multiple entries with your trades. And then we're going to go over also pair mastery and time correlation with certain pairs so you can figure out what pairs are best for you. All right, because every trader on here is different. Okay, I have a couple hundred people on this webinar, and every single one of you are in different situations, different financial struggles, or you know what I'm saying? Like everyone is different. So you're all gonna trade differently. Trust me, I was a different trader when I was struggling to pay my rent as when I'm not struggling to pay my rent. I'm a different trader, right? I'm the same guy, but because of my financial situation, it puts more pressure on you. And then it makes you maybe do more impulsive trades just because of that psychological switch that's happening. If you got to pay bills tomorrow, you may not have the patience nor discipline to just build risk a little 2, 3, 4, 5% of my account. You're like, no, I'm about to risk it for the biscuit. All right, I'm about to put 3, 4 lots on this $100 account, and hopefully it goes in my way. Okay. Anyway, so let's look at this trade right here. Now, obviously, we know because you can see what happened is that AUD dropped, right? Okay. Now, AUD USD is a what pair, guys? What main sessions does AUD USD move? Okay, so what I want you to look at is AUD and USD. Okay, this is on the 1 hour chart. Let's dissect this trade. Now, this was actually a signal I think I gave y'all. Now that I think about it, in September, that was a buy. Whatever though, that was sexy. But AUD USD is what session or what sessions are the best for AUD USD. There's 2 sessions. Okay, so what I want you to look at is every Forex pair is a pair, right? It has 2 currencies. So usually there's 2 time zones that you can trade it, 1 or 2. So you have AUD, which is the Australian dollar, right? That moves around Asian time. Okay. Then you have the USD, which is the dollar that moves around New York time. So you can trade AUD USD in Asian or New York. Now, does that mean that you can't trade it in London? Yes or no, y'all? Does that mean you can't trade AUD/USD in London? If the best times to trade AUD/USD are in Asian session and New York session, does that mean you should not trade it in London? Yes or no? Y'all saying, should you trade it? Correct, Judy. Correct. Okay. Exactly. Shouldn't. Shouldn't. Exactly. Miss Cook. There is a overlap, Cheryl. I agree. Okay, y'all so smart, man. Okay, all right. I like this group. I like this group of people, man. Y'all on the ball. So, of course, we can trade AUD USD, right? It's not like you can't trade a pair that's not synonymous with that session. It's not like you can't trade it. You can make money. Let's not be naive here, but it's just not as high probability as you taking a pair that's supposed to move during that session. Okay. So there's going to be times, even with myself, that I will trade AUD/USD in London. But I will say this, it's not likely, and I don't like to do it. Okay. I would much rather take a London pair if I'm going to trade London session. AUD/USD is not really a London pair, but can sometimes we trade it? Yes. Okay. So I'm just making that clarification. You can trade any pair at any time, trust me. But you're going to realize when you start to filter in your head what pairs move at what sessions, and I'm only going to trade corresponding to that session and that pair, that your trades are going to maximize. All right. So what time is this? This is roughly, so this is a 6 hour. So this is what we call the session break or period separator. The blue perforated lines here. See these lines? Boom, 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 boom. That means the end of the day. So from here to here is 24 hours. From here to here is 24 hours. Here to here is 24 hours. Right? So this is 5 p.m. At this line, 5 p.m. Eastern Standard Time. Okay? So this is the end and new beginning of the next trading day. So if you guys don't know, 5 p.m. to 5 p.m. is the trading day. Okay, so 5 p.m. is the beginning of the new trading day. The end is the next day at 5 p.m. So we're looking at the beginning of the trading day. Okay, and the beginning of the trading day is usually consolidation. All right, and then there's a move in Asian. So as you can see here, so I want you guys to look at right here. Okay, this is like 5, this is like 6, 7, 8, 9 o'clock. Now, what time is it? 9 o'clock? 8, 7, 8, 9. That's Asian session, right? AUD/USD moves around that time, right or wrong? Yes. This is the session. This is a good pair for the session. Okay, let's check it out. Okay. Now, if we look at, let's say, the higher time frames. Okay, let's look at the higher time frames. So that the 2 hour, it's like, okay, we have a zone here, a huge area, right? The market is overall bearish, but as you guys can see, it's been popping up. Like it hit this, my zone's bottom here, popped up really hard, okay, from this area, but now it's hitting previous support resistance area here, okay? Let's look at the 3 hour, the 4 hour. So because of the 3 hour and 4 hours looking good, right? We're getting bearish rejection really because of this candle here now in Asian, right? So now that we're in the prime time of Asian, like the 3 hour looks really good here. Okay, now what we're gonna do, so let's just say that we start to sell here in AUD/USD. And this is, so now I want to break down to you guys the risk management, the compounding, all that type of stuff as we're getting in the trade. Okay, so if I'm selling, let's just say I'm selling, I see AUD/USD and I want to sell it. What's going to be my next level first of all, what's going to be the next level that I sell to, right? That's drastically important, okay? Is to know if you're going to sell, what's the next level that it's going to go to, right? What's the next level, right? And all you have to do, this is just a quick way of doing it, is I go to the line chart, go to the 1 hour, and kind of draw your zone based off the 1 hour support resistance here. So this level right here. Okay. And then if I had to extend the next level, it would probably be this zone here. So you go to the line chart, then go to the 1 hour, and then extend those market structure levels here. So as you can see, okay, we have points of contact in the market right here, 3 times. We have multiple points of contact in the market here, here. We have 2 tops right here, right? So there's multiple points of contact at these areas, okay? So because of that, I like that. I like multiple areas of contact in a zone. Makes sense? Okay. So now I have my zones marked. Okay, cool. Let's go back to the 15 minute. All right. Now what we're going to do is we're going to draw our short tool. Okay. And what we're going to, where are we going to put our stop loss? Okay. That's a great question. Most people ask it all the time. All right. Hey, Ryan, how do you know where to put your stop loss? Well, that's a smart question. And let me break it down to you. All right. My stop loss is usually always above my last zone. Okay. And probably a good 5 to 10 pips above that zone. So let's measure a good 5 pips, which will be here. This will be my stop loss. Okay. So what I want you to remember when you're trading, right? And this is on the technical side. I'm what you call a zone to zone trader, right? I want you to think of the market as a pinball machine. This is why, because when the market goes here, ping, comes back, ping, and then the next level has to go ping, 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 and then eventually it's gonna break one of these 2 zones, right? And let's go ping, ping, right? It's got to break. It's just gonna hit these zones back and forth. That's how I want you to visualize the market. When you draw these zones, the market is going to have to hit these levels, okay? Based off of your higher time frame analysis, the candlesticks, and understanding where price is kind of gravitating towards, right? Where's the trend? But if you can draw your zones accurately, you'll know where the market is going to go. Or I should say, the most likelihood that it's going to go. Okay? Because we're never 100% accurate, but you'll have a really good understanding as to where the market is going to go, or where it's going to naturally gravitate towards, because the market is going to go to the place of least resistance. That's what you guys have to realize. I've said it time and time again. The market's going to go the path of least resistance. So wherever there's orders, wherever there's an easy gap to fill, or there's an easy way to stop hunt people, or there's a lot of sellers and there's not enough buyers, or vice versa, there's a lot of buyers in the market and not a lot of sellers, it's going to gravitate towards those levels, right? It has no choice sometimes in the market but to drop, because there's so much sellers and there isn't enough buyers. And the way you understand that is, for one, understanding, I would say, Forex pair correlation, and really understanding the pair, taking time to really study the pair. And that's really what's going to take you to the elite level, is understanding that pair. So, okay, let's just say we marked it up. Okay, let's just say we're getting in roughly around this area. Stop loss is 5 pips above the zone. Why? Because if we have our zone here, right, I'm going to put my stop loss 5 pips above that. Cool. I'm going to draw my next TP zones. If you guys notice, with my signals and the way I trade, I always usually have a TP1 and a TP2. Sometimes I'll have a TP3 as well, but usually it's TP1, TP2. And that's the way I like to personally trade. TP1, TP2, sometimes TP3 if I see it. That's it. Very simple. Okay. So so let's play this a little bit. All right. Let's play this a little bit. And what I want you guys to do, all right, is go to the 5-minute chart, because the 5-minute chart is my entry chart. So for a lot of you guys who are my students and people who just been following me, the 5-minute chart is my entry chart. Okay. So I will look and analyze the market on 15, on the 30, on the 1 hour, 2 hour sometimes, and then I will enter on the 5. Okay. So if you have to write that down, go write that down. But the entry is on the 5-minute chart. And that it takes time, because the 5-minute chart is a very quick chart. If you've never really looked at it, or you're still struggling with the 5-minute, it takes time. It moves very fast. It's something you have to get acclimated to. What I would do, so this is how I learned to go all the way down to the 3-minute. I didn't start trading on the 3-minute or 5-minute, guys. I started on the 1 hour, 30-minute, right? I got good at that. Then my entries got good on the 15-minute. Once I got good at that, I'm like, okay, let me try to get better entries. And then that's why I went to the 5-minute. Then I'm like, okay. Then I got good at that. Then I actually started going down to the 3-minute. Sometimes the 3-minute looks really good. Now, when I start to go to the 2 and 1 minute, it gets too crazy for me and I don't really like it. So I don't go anything less than the 3-minute, but mainly I would say 90% of my entries are based off the 5. The 5 gives me really good risk to reward. I'm happy just staying committed to the 5. I don't really need any time frame less than that. Okay. So can you go to the 1 minute, 2 minute, 3-minute? Sure, you could. If you want more stress in your life, sure, bro. Have fun. Okay. But the 5-minute really should be the smallest time frame that you go. You can heed my advice, or you can do what you want. I'm trying to tell you, if you're trying to trade Forex, there's no need to really go past the 5. Okay. Sometimes you can look at the 3 or the 1, but this is only if you're super scalping. Like I'm talking super scalping, like you're trying to catch 5 pips, 6, 7 pips, want to move. Hey, I guess look at the 1 minute. Or if you're doing binary, then that's a different scenario too. Okay. So entry on the 5-minute. Now, what I want you guys to look at is look at this 5. So let's say we sold, which we would have sold right here. We're gonna mark a circle for every entry that we take. Okay. And so if we're expecting the market to drop, right? We're expecting it to kind of pull up. Boom. Here. This is kind of what we're expecting, right? We drew our 2 zones beneath this area. And then we drew our top zone. We have our stop loss above the zone. Okay. And this is what I want you guys to realize. So we're going to go over kind of entries and compounding right now really, really quick. Excuse me. Okay. So the next candle. Let me see. Okay. So after this engulfing candle, what do you guys think I'm going to do after this engulfing candle? Should we resell it again or no? Yes or no? Should we sell it again or should we hold our entry? So we have an entry right here, right? Let's say right after this huge bearish engulfing candle and we sold it. Do we sell it now again right here? Or do we hold that entry? It's a great question. It's a great question. What do we do? Okay, Judy said, when you say enter on the 5, do you actually enter at the 5 time or no. So okay, great question, Judy. Hold on. When you say enter on the 5, do you actually enter at the 5 time? The close of the 5-minute candles. That's what I mean, Judy. After the closure of the 5-minute candles. Yes, I'm looking for candlesticks on the lower time frame. Brain said hold. No wait for candle reaches bullet. Sell again. Let me see. Isaac, okay. Erica said wait for pullback. Please said I would sell this. Is after. Lady said wait for the pullback. Okay. All right. Master, I wait for the pullback for second entry. Smart people. Smart people. Okay. So again, I didn't even look at this on the 5 minutes. So I don't know what's gonna happen on the 5 minute. But what I would say is, and this is just for me, y'all. All right. Me personally, I would sell it again. I would sell it again. Okay. Now, the reason being is because this is actually a confirmed entry, you know? So why is that? Because this is actually a smaller zone. Okay. If you look at it like this now. So I can't show y'all everything. All right. You know, I gotta mix it in here. So it's like, ooh, I didn't see that zone exactly. I'm sure you did it. Okay. That's the point. But now look at this zone. Then this is a smaller zone. Okay, this is like a 5-minute zone that it's now holding because we're on the 5-minute chart. Pulls up to this area, gives me a 5-minute engulfing pattern. On AU, I would sell that all day long. Oops. Let me see if I can. No, I can't. I messed it up. Let's see. We're gonna go back. All right. Let's see. Hey. I need you to be nice to me, Mr. Trading View. Mr. Trading View. All right, let's see. I don't even know if this was right. Let's see. Let's see if this was a hard pullback. I did pull back. Now let's look at okay. So for me, and this is part of the my scaling strategy, okay, is that for me, I get in on the trade, knowing my risk, okay? So let's say this is 5% of your account. Now, some of you guys are struggling with your lot sizes, okay? So what you need to realize is every trade, for one, you're gonna make a stop loss, okay? And you're going to round it up to maybe 10, 20, 30 pips, whatever that is. And you need to figure out the percentage that you're risking per your account size. So let's just say that this is a 30 pip stop loss and you have a 1 lot. If you have a 1 lot and this is 30 pips, how much are you risking? $300. You should know that. Okay. Off the top of your head, you should know that as a trader. If you didn't know that or don't know that, that's a problem. Okay. Every 10 pips on 1 lot is $100. Okay. So if you have 1 lot and you move 10 pips, that's $100. All right. If you have a 0.10 and you have 10 pips, so I'll write that down. All right. So when you have a 0.1, when you have a 1 lot, right, and we're gonna say times 10 pips, that's equal to what? $100. We'll write that out just so you guys know. Okay. A 0.01 times 10 pips equals what? Or no, not 0.01, a 0.10, because that's what I want to do. All right, is $10. Okay, so these are just some basics that you need to know, right? This is where I want you to, I don't want you to think about all the other crazy lot sizes. Just think of the ones. Just think of, okay, if I have 1 lot and it's 10 pips, it's $100. If I have a 0.10 and it's 10 pips, it's $10. And then you can work your way to whatever lot size you are. So if you do 2 lots at 10 pips, that's $200. That's all you have to do. Okay. That's really all you have to do to kind of reverse engineer it. That's the way I kind of do it manually, is that I just round it up to the tens. So, if I have to use 0.10s or 1 lots or 10 lots, whatever it is, 10 lots at 10 pips is $1,000. So you just have to figure that out. But here's the thing, you have to know how many pips you're risking on this trade. So for me, when I get a confirmed rejection, okay, which a lot of you guys know the 3 R's, I get a confirmed rejection, then I will sell again. Okay, so let's just say we sold again. All right, and this is the next. Let's see, okay, yeah, right. So then the market pops up back to this zone, which I previously made, pulls up into it. Now, at this point, I would sit here to myself and say, okay, is this going to reverse on me, right? Or is this going to hold? Okay. Now, this is how I think in real time, guys. If anyone's done my sessions, you'll notice that, like, obviously I don't like going in crazy drawdown. You guys probably remember when we were up like 5-6 pips on AU, and then it came back to kind of near break at a near entry. And I was like, hey guys, get out of it. It's like break even. And it's really because I can tell when the market's starting to shift. So now what you want to do when the market goes against you, you always go back to the higher time frames. Okay. You go back to the 15-minute chart. Okay. You go back to the 30-minute chart. You go back to the 1-hour chart. We have a huge bearish hour engulfing here. Still looks good to me. We have a nice possible head and shoulders double top holding the zone. Still looks good to me. Do you guys see that? So on the higher time frames, this still looks good to me. Now, what gives it away, okay, is on the 15-minute chart, what we have here, and this is a more advanced kind of concept, is a void that just got filled right here. So for, those people that kind of know that stuff, right, the more advanced stuff here, then this is a clean entry. Okay, so all I see is the market pulling back to take people out to fill this void and then drop again. Right, and this is, so I'm breaking down like the way I would look at this trade in real time. Right, so on the 5-minute, it looks like, hey, it's going up, but look at the higher time frames. What's it showing you? Even if your entries are a little off, that's okay. Okay, so now when we look at the 5-minute, okay, I'm going to look for some type of pattern that's going to confirm the rejection of this zone here, and that would give me my entry again. Okay, which kind of really didn't happen here. Just consolidated, and again, this is like Asian session, guys. Right, this is actually like, so it starts, it really drops for Asian like 8, 9, 10 o'clock. Let's just say we got a late entry. Instead of selling up here, we sold it down here, but we still saw the higher time frame. All you would look for now is some type of confirmation to get in again. And this is how you start to scale in and get in multiple entries. Okay, you don't have to go crazy, right? Okay, how come my screen is like freezing? Trading view is like, let's see, it just froze on me. Okay, so let's look at it. Okay, so back to what we were doing. 15-minute. Okay, it's rejecting the zone. Cleared this void. Also mean rejecting this area, the green box. Okay, and starts to pull up and then pop back down. All you're going to look for is this at this point is confirmation candlesticks that are kind of giving you the confirmation of the rejection. And what you'll have to do is toggle through the different time zones, because sometimes, and this is a very key factor for those of you who are really listening, okay? I really want you to listen to this. You're not going to see confirmation on every time frame. Sometimes you're going to have to filter through multiple time frames to get it. So that's why I have multiple time frames that I use. Like, you don't see me just on the 1 hour, just on the 30, just on the 5. Because sometimes, guess what? You're going to get your confirmation candle on the 30-minute, right? You're going to see a huge, what type of candlestick formation is this, guys, right here? Morning star, right? A bearish morning star pattern. Really nice on the 30-minute. Okay, that looks really good. That looks really good, right? Wouldn't you guys agree that looks really good? Okay. I look at the 1 hour, it's still holding this bearish engulfing right here. We look at the 15-minute, it kind of looks choppy, it's rejecting, but it's, you know, it's not bad, but maybe not a clear pattern. Then if you go to the 5-minute, maybe you're still confused, right? So you may have to just sift through different time frames to really catch confirmation for that move. So like when we go to the 30-minute, I really like this morning star. I'm like, okay, now this makes sense. So when we go to like the next candle, look at the 30-minute. It's holding this and getting more bearish. I'm really liking AUD USD. Now I'm really liking it. Okay. Look at the 15-minute now. Okay. Holding the zone, rejecting the zone. So now the higher time frames are coming back into play. The 30-minute is now holding this morning star right here. Okay, so let's remove all of the drawings just so you guys can see the raw price action. Okay, so let's go to like the 15-minute. All right, and again, this is just all about technical mastery, guys. Okay, because you don't even need anything on your chart. If you notice, do I have an EMA? Do I have an SMA? Do I have 50 indicators? Do I have a harmonic pattern? Do I have trend lines? I don't even have none of that. Some of y'all think like I have the craziest indicators, and in fact, I have none. That's the funniest part. And most people will try to sell you on bullcrap indicators that don't even really work. When really all you need is just to put in the time and understand raw price action just like this. If you can recharge just like this, you can make money. You don't need anything else. You can make 6, 7, 8 figures in trading if you literally practice naked charts and then add indicators later. But you have to have a base of understanding naked charts. So we can just play this out, right? And then this is now kind of into London. So it dropped for Asian, and we're just going to assume, right? So we could have sold up here, but we're just going to assume, right, that we got a bad entry. And this happens to a lot of us. Guys, it still happens to me here and there. I'm not the perfect entry king all the time. Okay? I know it may seem that way, but it's not that way. And I think a lot of you guys get that misconstrued, thinking that a lot of the people that you look up to are the people that are your mentors or who are, you know, you're really learning from. You think that they're perfect. And I promise you, we're not. We're just better, but we're not perfect. Okay. So there are times when I get bad entries too. Okay. And, you know, we sell right here, just like that instance I gave you guys. Let's just say we double sold here, right? At maybe 2, 3, 4% of our account. Okay. Let's just say, hey, we got 2 entries. Now we're in drawdown of, what would it be? You know, it'd be drawdown of 8, 9, 10 pips max. Okay, 10 pips max. So let's say we have a 30 pip stop loss or even a 20 pip stop loss, but it pulls up 10 pips. You have to be comfortable with getting into drawdown. All right. So this is something that a lot of you guys aren't acclimated to do, right? Because it sucks seeing the red on your screen. Right? And I just want you guys to know that's all psychological. Okay? I just want you guys to know that. There's a reason why when you're losing, you're seeing red. There's a reason why. There's a reason why the MT4 does that. Okay. You know, red is what? Like red just in general signifies what? Like it's stop signs, red lights, warning. It's all psychological. The colors, okay, the color schemes. So you have to understand that no one likes to see that because we've been programmed as since younger, red light, green light, yellow light. Okay, red means stop. Okay, so when you see too much red or for too long, you start getting nervous. So you have to start to reverse engineer your not only the trading but your emotions, and that's off a whole different tangent. Okay, in a whole nother webinar. But we're going to stick to kind of the basics, right, of becoming a 6 7 figure trader, which is again the base, right? The first base, I guess you can call it, is technical mastery. Okay, you have to have basic technical mastery. Okay, and the way you do that is by going to the charts naked and afraid, like that show, Naked and Afraid. You feel me? Naked. Don't put anything on your charts. Don't put SMAs, don't put EMAs, don't put Bollinger Bands, don't put harmonics, don't put none of that crap. And it's not that that can't help you and enable you to become a better trader, but what you need to do is you need to master naked charts first before moving on. Okay, I need you to strip away all the indicators and all the bull crap people have been feeding you. And I need you to come back to reality a little bit. Okay. So this is what we're gonna do. We're gonna go to our naked charts. We're gonna pick a pair that we are going to trade consistently. So for me, ADUSD is that pair that I trade Asian and I trade New York usually. Sometimes London, but not really as much unless it really looks good. Now, I'm going to back test that for 2, 3, 4 weeks. And I'll show you how I back test in a second. And that's very quick. Okay. So number one is you take your pair, you make the chart naked, you start back testing that pair. Okay. And then you move on to maybe 2 or 3 pairs. And then those are going to be the pairs that you use for that session. And you master those 2, 3 pairs that you have. Okay, that's going to be the first step. So for AUD/USD, I'm kind of showing you guys this kind of steps that I see when I'm trading. So again, we look at the 30-minute. The 30-minute was a huge bearish morning star pattern here, right? Which was really nice. It held the zone, held the void. Okay. And then of course now the market's starting to drop as we predicted. Okay, cool. Now it hits my first TP level. I showed you guys why I drew that. Okay, why I drew that zone. Now, what do we do at this point? This is how I handle my trades. Okay. I now move my stop loss to down here. So so now my risk is very small. It's very tiny, if that makes sense. Okay. I'll move my stop loss maybe like at break even or maybe 2, 3 pips above break even. And this is how you manage your trade properly. When it hits TP1, you move your stop loss down to your entry, close to entry, or like a couple pips above it. Okay. That's how you handle it. You no longer have your TP up here. Okay. Now you can essentially move your TP down. Even if it's right there, you can move it down. Okay. So that's number one. I move my TP down. Then number two, I take 50% off. Okay. So let me see here. Wait, why can't I, okay. So let me write that down really quick, right? So I'm going to put risk management rules, okay? And then we're gonna say when TP1 is hit, move stop loss to entry or close to entry, okay? And then number 2, take 50% or more of your profits at TP1 and let the rest ride until TP2. Okay, now some of you may be asking me, okay, Ryan, why do you take partials at TP1? Because there's always a potential that the market could pull back to your entry again. Okay, so how many times have you been up 10, 20, 30 pips and then the market pulls back to your entry? You're like, shit, I should have just taken my money. Now I'm in the negative, or now it's back to my break even, and you're pissed. I'm sure it's happened to everybody here. There's no one here who can tell me that never happened, okay? Nobody. All right. Now, the way that you break that habit, okay, is to always at TP1. When I say always, I mean always take some money off. It's the hardest habit to accumulate, but I promise you, your account will love you for it. Okay, so you have to always take money at TP1, always. All right, it's something that took me a long time to figure out, and I didn't really master that until, like, I would say last year. Early last year, really. Like, I would just let trades run, but I wouldn't really take partials because I would know ultimately where it would go. But I realized that I can make more money, secure my money, and trade a lot less stressful by taking partials at TP1. Okay, so that is my rule for trade. Again, this is trade management. Okay, trade management is what? How you manage your trade when you're in the trade. All right, how are you managing it? Anyone can tell you sell AUDUSD and you sell it, and you're like, all right, and then you're up 10 pips. You're like, damn. Some of you guys in my chat's like, Ryan, what do I do? Should I hold? I'm like, you don't know how to manage it? So it doesn't even matter. I'm giving you a good signal. So it doesn't even matter because you're not managing it properly. Some of y'all were holding NJ for like 2-3 days. Come here. Whoever was holding NJ for like 2-3 days, come here. Let me bring your face right here to the screen. Hold on. Just let me do that. Can you, if y'all look at my signals, right? We were buying NJ. It hit TP1. TP1 was like 40 pips. You didn't secure anything? Come here. Come closer. Come. Just let me give you a little love tap. Okay? Because that's what you deserve right now. Because when you're up, and here's my rule, when you're up at least 15 pips or more, and this is just my style, you better secure something. Sometimes even 10 pips with AUDUSD, sometimes even 10 pips is enough to just secure something. Meaning you secure 25, 30, 40, 50% of your trade. And all you'd have to do is swipe left or swipe right on your MT4 on your phone and cut your lot size in half or whatever you want to do. Okay, so you can do it on your phone. If you guys don't know, okay? But I'm trying to help y'all, okay? Because some of y'all, so then the next day we bought NJ again, okay? And then y'all were holding until the next trade. You're like, Oh, so you went through like a whole 24, 36 hours in draw. We're up 50 pips. Then went back in drawdown. Lord help me. I'm actually gonna pull it up. Let me see if I can pull it up. Okay, here we go. Let's pull it up. Just so y'all can see visually. Okay. Day one, we bought. I said we were buying like right here. Did I not? Okay, cool. Right? This was like a 40, 50 pip move. Yes, this was a TP2 up here, but at TP1, you secured the bag. Okay. And this was like the end of New York session. So this is London session into New York session. Okay. New York reversal. So why would you hold on to this? You feel me? Why would you hold on to that long? Again, all these trades, guys, right, are intraday trades. So really they're kind of session trades, if that makes sense. So by the end of the session, the move should be done. So this is like London starts at 1, 2 o'clock. Okay. Right here is at like 8, 9, 10 o'clock New York. So now New York session is about to start. London's about to close. There's a reason why we get out here. And that is why New York dropped. Okay. All right. So now we go to the next day, London session again. We start to buy. Where did we start to buy? We start to buy like roughly around here. Okay. It wasn't the cleanest entry. Went in a little bit of drawdown of about, let's see, of about 45, of about maybe 16 pips. Okay. Something like that. Wasn't the cleanest. Okay. But I basically told you guys, and that's why I drew this zone. I'm like, if it holds this zone, right? Again, that zone's a zone trading, right? You put your stop loss beneath that zone. As you see, my stop loss is where? Beneath that zone, you're good to go. Simple, okay? So then we bought again, made another 40, 50, 60 pips. Now, you can see that it wicked almost to the TP2, but some of y'all were holding, and here's the kicker. Some of y'all were holding for 2 days, and then NJ was like, here, dropping, and y'all like, hey, you still in the NJ buy? No. How come you didn't make money here? How come you didn't make money here? So this is a prime example. When it hits TP1, right? Or when you're up in the market, and when you're up, I would say anywhere from 15 to 30 pips, right? Or if it hits TP1, secure something always. This is risk management 101. Okay? If you're up 15, 20, 30 pips, secure the bag. If you're at TP1, secure the bag. Say it with me in the chat. Secure the bag. Okay? Some of y'all aren't securing the bag. You're letting the money run from you. You're chasing the money and the money's running from you. And you got the money. You're up 20, 30 pips. And you're not grabbing it. And the funny part is some people are asking me in the chat, yo, Ryan, are you still in it? Hell no. I made my 50 pips here, my 60 pips here. What I gotta hold for? I don't gotta hold for nothing. So while people are holding for 2, 3 days, I made 2 good trades, compounding my account. Oh, thank you. Done. Right. And then we were actually looking to sell NJ. We sold it actually. Dropped like crazy. Okay. So let's go back. Right. Because it's all about risk management, guys. Risk management. Okay. And so that's 101, how to manage the trades when you're in the trades. Okay. And that's why I wrote this rule out for you. When TP1 is hit, move your stop loss to entry or close to entry, right? Number 2, take 50% or more of your profits at TP1 and let the rest ride for TP2. Okay. Number 3, I would put if you're up 15 to 30 pips on a move, I'm gonna put secure the bag. Okay, it's that easy. Secure the bag. All right, meaning you move your you don't let that winning trade to turn to a losing trade. You either move your stop loss to break even, you at least take something off, right? Even if you have one entry, you can make that a partial. So if you 0.10, you can cut it into a 0.05, meaning you cut it into half, and you would actually secure 50% of that profit. Okay, and you can do that from your phone. So unless you guys don't know how to do that from your phone, which I'd have to go over another time, okay? But risk management is key, okay? How you're handling these signals is key. How you're handling your trades is key. And this is probably one of the biggest and most neglected parts about technical mastery, okay? Anyone can tell you, oh, sell AU, and you sell it and you're making money. But if you're not handling it correctly, if you're not managing it correctly, you're still going to lose. Your account is still going to dwindle. As I see, I'm giving y'all good signals and people are still losing money. They're still not managing properly. I see it all the time. And it's okay. That's why I'm here doing this long ass webinar. Okay. All right. So I want to go over that really quickly. Just off of the TPs, how to manage it, your risk management on your trades. Okay, because this is going to be critical to your development as a trader. Some of y'all don't even realize how crucial it is. And I'm telling you, it took me years to really master my management of my trades. It took me a long time, way longer than it's probably gonna take any of y'all, because I'm giving y'all the game. Okay, so no one's gonna take years to master this, right? But the management of your trades is what's going to keep you in the game, not just getting in good trades, but managing it properly, being conservative. Okay, I need you to be conservative. Learn to be conservative when you're taking these trades. So even if I say, hey, AUD USD sell, or anyone says AUD USD sell, I'm targeting 50 pips with a 30 pip stop loss, and you're up like 25, 30 pips on it. Secure something. You're like halfway there. Okay, at least secure something, because what's going to happen is that's going to become your habit. And that's going to save you way more than it's going to hurt you. Okay. How many times has the market been up 40, 50, 60 pips on you and then reversed, and then you were pissed that you didn't take it? Okay. So you need to build the habit of taking it. And it's not a habit that you're going to like to build, which is why I'm here. All right. So let me kind of go back to let's go to the next one. All right. So master your risk management. Some keynotes about risk management really quick. Some keynotes. Number one, always know how much you're risking before you enter the trade. If you have to screenshot this, please screenshot, because this is crucial right here. This is everything. Not gonna lie to you. Number one, I'll say it again. Always know how much you are risking before you enter the trade. Not after, not during, before. Okay? And you should be risking 2 to 5% per trade. Okay? It's very simple. Per entry, per trade. Whatever your flavor is. Number two, always have a stop loss. Now, for those traders who say, I don't need a stop loss. Yeah. Look, bro, I don't know what to tell you. I don't know any firm, any hedge fund, any multi-million-dollar trader, anyone who's moving millions and millions in the market who doesn't have a stop loss. Okay. So maybe you're just so good that you don't need a stop loss, or is it that you're just so bad that you can't find the stop loss and it's always getting hit. Ah, burn. Oh, because it's the truth. And some of y'all need to hear the truth. Not saying that's y'all, because y'all are just too smart. Y'all using stop losses, right? 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 Y'all using stop losses, right? Look at y'all in the chat. Okay, I'm just making sure. But some traders don't use it. I'm not taking shots at them. But what I'm going to tell you is how the hell are you going to protect your account if you don't have a stop loss? And if you don't, here's the thing, even if you don't have a hard stop loss, what a hard stop loss is, meaning that you actually put it in your MT4, you should have an area or a level where you don't want the market to go. And you know, hey, if it hits this level, I'm going to get out the trade. Even if it's not a hard stop loss, you should know this is my risk. If it hits this level, I'm going to get out. Always. If you don't know your risk, then you don't know anything about trading, because trading is not about how much you can make. It's about how much you keep. It's about account preservation. Okay. Hold on. All right. So number 3, do not trade a pair when you don't understand the risk. This is huge. Oh my God. Some of this is so simple, but I need y'all to listen. Some of y'all next week are like, oh my God, Bitcoin. And you never traded Bitcoin a day in your life. Do you understand? You never traded Bitcoin. You know what Bitcoin does? You don't even know what it's going to do, but somebody's going to call a Bitcoin signal somewhere, or you're going to see on the indicator Bitcoin's going to go up. You're like, let me buy some Bitcoin. And then here's the problem. Now that you're buying Bitcoin, you don't even know what lot size to use on Bitcoin. You're like, let me put a 0.01, let me put a 0.12, let me put a 2 lot, let me put a 5 lot, 10 lot, $1 million lot, parking lot, whatever lot you want to do, you're just doing it out here. That's the problem. That's the problem. You're going to trade things you don't know with a lot size that you don't understand and expect that you're going to become successful. No, it doesn't work like that. Okay? So you can trade. I'm not saying you can't trade Bitcoin. That's not what I'm saying. What I'm saying is, if you don't know your risk and your stop loss with Bitcoin and the proper lot size, you shouldn't be trading it. This is all part of risk management. Okay. Number 4, lastly, have a mental drawdown threshold in your mind that you will abide by. Right? I kind of said that a little earlier. So example, really quick. I will not let my account run past 25% drawdown at any point in time. This is very powerful. This is what I want you guys to realize. Okay. So for me, right, and this is my aggressive accounts. If I'm risking 5% per trade and I'm even scaling in on 5%, or 2-3% on my compound, my entries, my maximum drawdown in my head is I'm not going past 25% drawdown. Because if I'm in, let's say 3 trades at a time, which is my max trades, I'll be at a time at 10% each, or for whatever reason, let's say I scaled in like crazy and it's like 10% each. You know, once it starts at 25 to 30%, I start to get cringy. Like, okay, let me close. Let me start scaling out of this trade. And what I realized is that this has kept me a whole lot more accountable to my trading account. See, some of y'all don't think like this. Some of you guys are thinking reverse. Some of you guys are thinking, how much money can I make on this trade? But what you really need to think about is, how much money can I lose on this trade? Light bulb moment. Okay. That's how you want to think. Okay. It's very counterintuitive to the majority of people, the majority of retail traders. And this is why the majority are losing. Okay. Because they're not thinking like this, including myself for the longest time. right? This is how I thought. This is how I know that's why you guys are thinking like this. And that's why I'm trying to convert your thinking, even if it's slowly but surely. And one webinar with me isn't going to, make you into this masterful, beautiful, star-studded trader. Like it's not going to happen, but you're going to pick up something or a few cues here and there, and you're going to slowly start to pick up and get better and better and better. That's what I'm trying to tell you guys. Like it's not going to happen overnight, but hopefully from these webinars, you're picking up something, even if it's just one thing that I'm saying, right? And there's so many problems or so many things that I can tackle that everyone's going to maybe pick up one thing differently. Okay, but hopefully you can pick it up so it increases your trading level, let's say. Okay, but for me personally, right, and this is what is taking me to that 7-figure level. I'll say that. Okay, this is what 7-figure Ryan is on. Okay, and it's when you don't let your account go past a certain drawdown. You really want to get to that elite level? You really want to get to 7-8 figures? You have to have this in your mind. It's not about how much I can make, it's how much can I save. You got to think like those crazy couponers, yo. Have y'all watched the shows with the crazy coupon ladies? It's called Extreme Couponers, right? And they're going crazy for the coupons, for the savings. I'm talking, they'll go to the grocery and the grocery will owe them money. I don't know. I've never did that before, right? I'm not a coupon guy, clearly, but y'all know what I'm talking about. Like they literally spend all day cutting coupons, right? And then go to the grocery and come back with a zero balance. It's amazing. Like they'll spend $300-$400, and because of all the coupons, they won't have to pay anything, right? Or sometimes even the grocery store will have to pay them $5-$10. Like we'll owe them money. It's crazy. Okay, but it's all about self-preservation for them, right? It's about saving. Like that's almost how you have to be. You have to think about your account like that. Like I'm trying to save. I'm not only trying to make, but I'm trying to save. Get in that mindset. Get in the mindset of I'm not going to redeposit anymore. Make your last deposit your last deposit. Okay? Make your last deposit your last deposit. How about that? That's powerful. Okay? When you can think of it like that, like, okay, all right, I'm going to buckle down and I'm not going to let my account break a certain, because here's the thing, how can you blow your account if you're not even letting yourself hit 25% drawdown? Someone help me. It's not. If you're a okay to somewhat decent trader, your account's going to grow. It's going to take time. It may not happen in a day or two or first week or two or first month, but it's going to grow. Okay? So for you, you need to have that mentality. Stop thinking, how can I grow my account? How can I grow my account? And I thought like that for a very long time. Now you want to get to that elite level, think, how can I preserve my account? How much am I risking? And then all you have to think about is make a drawdown for yourself. It doesn't have to be 25. It can be 10. It can be 15. I would say don't go more than 30. So my students, I tell them, look, don't go more than 30% drawdown. Okay? That's what I would tell them. All right. So if you want, like, hey Ryan, what drawdown should I have in my head? I would say 20 to 30%. And that's why I put 25%, because it's right in smack dab in the middle. 20 to 30% should be your peak drawdown. If you're going 3, 4, 5% risk per trade. Okay. If you're doing like 1, 2%, then you shouldn't even go past 10% drawdown. Okay. But if you're doing like me, I do like 3%, 5% per trade, sometimes 6, 7%. I need a little bit more drawdown. I'm perfectly comfortable with 20% drawdown. 25 is like a little rough. 30 is like my threshold. where you want to start closing trades and getting out. Okay, because you can still recover from 20%. Okay, you can still recover from 10%. You lose 10% day, 5% day, 15% day, 20% day. You can still recover from that. Again, if you're doing 5% risk per trade, still recoverable. Okay, seriously. But if you lose 60% of your account, you go from $1,000 to $400. It's a little tough. Now you got to rebuild. And trust me, you're not going to want to rebuild slow because you just lost $600. So by default, your psyche is going to say, all right, I'm about to put like 5 lots and I got to rebuild this quickly and back because I want my money back. And then that's when things start to go the opposite way. And you start to lose your $400. You go from $400 to $200. And then you're like, oh no, I keep losing it. Now you're mad at your girlfriend or your boyfriend. You get in an argument later that night. And you're all sleeping on different beds. All because you decided to over leverage your trade account. By the way, it's a true story happening. Anyway, good times. That's why I'm single. Anyway, let's wrap it up, y'all. All right. So I'm gonna wrap up with a few things. Then I'll just do Q&A. So master compounding in multiple entries, right? That's going to be another aspect of mastering technical analysis, right? Is the entries, like I told you guys, getting in. So we can go back to backtest, right? The real way to understand entries is really from backtesting and doing it live. Nothing will replace time in the market and experience. So really quick, let me show you how we backtest, okay? So this is how I backtest. Let me go to a clean chart. I'm gonna go to, let's pick a different pair. Let's pick Euro Odd. No, Euro Odd is Bay, but actually I don't want to do that because I want to pick a pair that I haven't really marked up because I don't want to. This NU, look at NU, is so sexy. What's NJ? Let's let's look at NJ. Cool. All right, so we're looking at NJ. So this is how you backtest, guys, really quickly. All right. So obviously you need TradingView and you need, I believe, I don't know what type of, the premium account, which is, I think like 10, 15 bucks a month, something like that. So I'm pretty sure you need that. I'm not sure if the free version has it. I don't know if someone in the chat can correct me if I'm wrong, but I'm pretty sure that the free version doesn't have the rewind ability or backtest ability with TradingView. So to get it, you will need to pay like 10, 15 bucks a month on TradingView. Now, I'm not getting paid by TradingView to tell you that. I'm just telling you that's what you got to do. Okay. And if you want to use my affiliate link, then message me. Cool. But if you don't, cool. It doesn't matter. All right. But hey, all right. It's just what you need. Whether you take my advice or not, it is what you need. Okay. It's a small drop in the bucket for your trading experience. If you want to be a full-time trader, think about it. You want to make 5, 6, 7 figures a month, but you can't invest $10, $15 a month. I don't know what to tell you. Okay. In any business or any endeavor, you need to make sacrifices and investments. Okay. So anyway, let's go to NZD/USD or NZD/JPY. And what we're going to do is we're going to backtest Asian session because NZD, okay, really quick, NZD is what? New Zealand, okay? And then JPY is what? Japanese yen. So Japan, Asian session, NZD, New Zealand, also an Asian session pair. When do I truly like to trade NZD, JPY, Asian session, or London session usually? One of the two, but primarily Asian session, okay? So with that being said, let's just backtest really quick. And this is how I backtest, okay? This is how I backtest. I see, I'm not supposed to have this markup here, but whatever. So what we'll do is we will rewind to whatever time that we're going to start trading. So as traders, if we're in Asian session, what time do you want to start trading? Okay. Think about that. What time are you going to be at the charts trading? And that's the time that you want to start. So as a trader, when I look at Asian session, I probably usually start around 8 o'clock. That's like for me, Eastern Standard Time, 8 o'clock. I'll probably look from sometimes 7, but let's just say like from 7 to 10 o'clock is when I look at the market. So NZD JPY, this is 5, 6, 7, 8, 9. This is 9 o'clock here on NZD JPY, right here, 9 o'clock or 8, 9. Okay, cool. We're looking at the market now. So what are you going to do? Okay, so you go to the session that you're going to trade. Okay, so you don't just pick any random time. You pick the time that you're going to start trading every day or whenever you're going to trade that pair, whether that's New York session, London, doesn't matter. And again, you want to trade the opening of the session. So the opening of Asian session is 7, 8 o'clock. The opening of New York session is 7, 8, 9 o'clock. The opening of London session is like 1, 2 a.m. And this is, again, all Eastern Standard Time. So if we're going to trade Asian, let's kind of start around 7, 8 o'clock, maybe 9 latest. All right. So what you're going to do is you're going to put like a long or short tool. You're going to say to yourself, hey, is this going to go up or down? Okay. Basically, you're going to figure out if this thing's going to go up or down. All right. And the way you're going to do this is by going to the higher time frames and seeing like, hey, is this thing about to go up or is this about to go down? Let's go in the 1 hour. Then let's look at the 2 hour. Right. Then you start drawing your zones. You start doing your full-blown analysis. Like, okay, we have this zone here. Okay. And then we have like this zone here. Okay. And then so you start doing your analysis like you would for any pair. Okay. You do your full-blown analysis first and then make a decision. Okay. Look at your 4 hour, look at your higher time frames. Like, okay. All right. It is bearish. It is looking like it's ready to drop. You know, we have a really huge bearish engulfing there on the 4 hour. Okay. So like, okay, this is looking pretty bearish. Like, so maybe I should start selling it. Maybe like you just have to figure out, and it's okay to be wrong. Okay. That's the thing. It's okay to be wrong, but because you don't know if there's news, you don't know if there's crazy or if there's an erratic reason, you can't correlate pairs. There's a lot of things that you can't do when you're back testing. So here's my rule of thumb. If you're at least 60 to 70% accurate on back testing, then you're good. Because once you get to real life charts, your accuracy is going to actually increase. It's harder to trade back testing than it is live. So now you're training yourself. This is like when you're training yourself with weights. Okay. So if you're training yourself with weights, let's say y'all know I like to work out and stuff, right? So let's say you're doing like a weighted pull up, right? So you have weights while you're doing the pull up, and then you take off the weights. The pull up is now easier, right? It's now easier. If you guys notice, if you ever worked out, if you try to do regular pull ups, you'll actually struggle more than if you do weighted pull-ups and then regular pull-ups. The reason being is because now your mental, your psyche, you've already did heavier weight, right? So you're in the mindset like, yo, I was just pulling 10 reps with like 30 pounds on me for regular pull-ups. So now when you take the weight off, obviously your muscles are prime and blood is flowing and the adrenaline is pumping. So you just keep going. And now the pull-ups seem easier when you don't have any weight, right? So you adapt, right? So it's kind of the same thing with back testing. Back testing is kind of when you have weights on the market because it's harder. It's not easy. Okay. You're damn near not going to be 80, 90% accurate. There's no way. I'm trying to tell you. There's no way you're going to be 80, 90% accurate on back testing. Okay. Or I shouldn't say no way, but I'm gonna say like a high probability that you're not gonna be 80, 90%. Okay, when you're back testing. But what you're going to realize is that once you stop back testing and you go to the live markets, it becomes easier. It's like you take the weights off and you're like, wow, okay, I know news. Okay, now I know what other pairs are doing. Okay, now I can look at other pairs and kind of correlate, and oh, I can draw my zones better, more effectively. Like you're going to be able to actually see the market with more clarity. That's why backtesting is actually so powerful, because it's harder to do. If I had to choose live trading and backtesting, I would choose live trading because it's easier. Okay, backtesting actually sucks, but guess what? You can do it a lot quicker than live sessions. Okay, if we sat here and try to trade London session, we're going to save for 2-3 hours trading it. But when you backtest, I can effectively trade maybe 20 days worth of London sessions in 30 minutes. Okay, so I can basically trade 20 days in a row in like an hour maybe, instead of live trading for 2-3 hours and only trading one session. So you can get a lot of days in. All right, so this is what you're going to do. Let's just say we wanted to buy NJ. Let's just say this is what we were trying to do. Okay, and then what you're going to do is you're going to play the candles. So let's say, okay, oh damn, we lost. All right, damn. All right, you lost it. Let's say we were expecting to buy and it dropped, even though obviously the higher time frames was going down. I'm just giving you guys an example. Okay, I'm not going crazy here. Right, so it dropped. Okay, you lost that one. Then what you're going to do is go to the next day, right, or the next session, right? And so now this is roughly London session, right? So now it hits the zone, starts to engulf on the 1 hour. Let's take off all of that stuff, okay? And then let's just say we were buying, and then, okay, now it starts to buy up. Now it finally goes up. Okay, then now we're in 6 a.m. It's like 6 a.m., 7. This is roughly around like New York session. Is NJ great to trade in New York? Not really, but can it be traded? Yes. Okay, cool. Let's look at it in New York session. So what's it looking like in New York session? All right, cool. Possibly looking like a sell now. All right, in New York session, back down to this level here, right? Based off the higher time frames, when we look at, I'm pretty sure the 2 hour, the 3 hour, the 4 hour, all that type of stuff there. This is the huge bullish engulfing though. I don't know. So we'll see, right? Goes up. So this is a way that you're going to be able to just test yourself. Now, whether you're losing every time or winning every time doesn't really matter, because this is the only way you're going to learn. That's the key thing. And I'm just giving you guys examples. Like, I'm not doing a full-blown analysis on, hey, that's going to take too much time. We've already been on the webinar for like 2 hours, right? So I can't do a full-blown back testing, accurate, analysis. Okay, but I'm just giving you guys examples. All right, so let's just say then you lost that one. Okay, cool. Then let's go to the Asian session the next day. So this is like 5, 6, 7, 8. Let's just say, okay, let's just say you looked at all the time frames and you're like, okay, we're gonna sell it from here. Where are we gonna sell it? Okay, we're gonna sell it from here to here. All right, and what happens? Let's look at it. It sells, pulls back. Now it's like roughly London, and okay, I don't know. Does it pull down? No. Consolidates. This is horrible. I'll get out the trade. Okay, so this is like end of the day, 12 to 3 o'clock. This is trash. Okay, so that happened that day. All right, cool. Let's wait for the next day. All right, let's go to agency. Oh, okay, that definitely probably had to be news. That was probably a news spike. News spike, oh, definitely a news spike. Then we have London, keeps popping up. So this is kind of how you want to test it. Now NJ is kind of a really Asian based pair, so you can trade in London, but it's mainly Asian based pair. But what you want to do is dissect each day, like as you would trade. You would do a top-down analysis, start from your daily to the 4 hour, to the 1 hour, to the 30, to the 15. You start from the top down, analyze, okay, and figure out what it's going to do. Okay. And then you just do it by session every single time. Okay. So let's go back down to 7 o'clock. So it's like 6, 7, 8. Let's do one more. Okay. So let's see what NJ is doing again. So let's go on the daily. It's still bullish, but this is like a huge weekly zone right here. That's a weekly zone. That's a daily. On the 4 hour, 3 hour. Okay, didn't hit that area. Look, so now it's bullish on the 3 hour, bullish on the 4, on the 1 hour. So what I would do is like, okay, to me, what the market is saying, like if it starts to pop up here, then I would start buying at the 2 point. If the market starts to break this zone here and start to hold, basically, that's what I would do. If it started to hold. So now let's see. Now it's holding. So this is the buy. Yep, there you go. See, like that's when you do like a full blown, now like, yeah, okay, hopefully y'all guys get it. But the point is you want to do a full blown market analysis on each time you're going to trade. Like, so you look at the higher time frame, you look at the lower time frame. You don't just say, oh, I'm going to buy or sell. You want to analyze it fully. So I'm trying to do it kind of quick, right, to save time here. But that's the way you're going to back test. So when I go back to my PowerPoint and I say the real way to understand entries is from back testing and doing it live, nothing will replace time in the market and experience. This is what you need to be doing. This is the tedious crap that most people aren't going to do. Okay, and I know the webinar has been going for like almost 2 hours. Y'all are tired, hear my voice. I know it's not the most fun. It's, it's boring, but this is the information. Trading is boring, okay? I'm letting y'all know. It's not as fun as you think. What's fun is the money. That's the fun part, okay? The fun part is getting better, all right? But this can get really monotonous. It can, and it's something you have to be prepared for, right? I'm being real with y'all. It's something that people don't really, they're not told. They're not told like you got to practice. They're not told that you really have to back test. That this is just day in and day out, and it becomes a monotonous routine that you get tired of, and it's like almost like a job. Like you get tired of it. But you're gonna sacrifice for the results. It's about how bad do you want it. Okay? Because if you put the time in, the time will reward you. You plant the seeds, the fruits will grow. Okay? So I'm just letting y'all know this is what I've taught my students in the past and what I'm teaching you guys. All right? Is back testing is essential. It has to be the backbone of your trading. If you want to master technical analysis, you have to back test. There's no way around it. There's no way around it. Okay? The reason why I've gotten better every single year is because I started to back test certain pairs intimately. Okay? I would back test AUD/USD for a full year. I know the tendencies of AUD/USD because I back tested her for like a whole year. Meaning I looked at every session for a whole year. I will spend 5, 6, 7, 8 hours back testing. That's just the type of dedication I have, and that's light for me. That's nothing for me. Okay, not saying that y'all have to do that, but I'm just saying like I look at charts so much that I can look at charts for 5, 6 hours and it's nothing. That's why some of my sessions, as y'all know, my sessions will go 3, 4, 5 hours, 6 hours, y'all, right? Like that's nothing. That's regular for Ryan. For anyone else, that's a long ass session. No, that's regular for me. And that's because, listen, that's because I used to back test and study and look at charts so long. I used to look at charts for 5, 6, 7, 8 hours. So doing a session to me, it's nothing. What do you mean? It's like the same thing as looking at charts. So I'm not saying that you guys have to be chart bums, okay? And I'm not, and I don't want to scare you guys to think like, oh man, Ryan, are you telling me that's what I got to do? Like, I have to look at charts and back test and study them for 4, 5, 6 hours a day? No, that's not what I'm saying. I'm saying they'll help though. All right. I'm saying it'll help though, but you don't have to do that. Okay. Because for me, in my early stages of trading, I was not back testing. Okay, let me repeat that. I was not back testing when I first started trading. So if I would have back tested my first few years of trading, I would have elevated way, 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 way quicker. Okay. So instead of looking at charts for 4, 5, 6, 7 hours, I could have back tested for 1 hour and accumulate the same type of experience. Does that make sense, you guys? So because I was live testing and just looking at the market live, right? So imagine you're sitting there from 7 o'clock New York time to maybe like 5 o'clock, PM to the close. Like you're just staring at the charts like a job from 7 to 5. Okay. Instead of doing that, which I was doing, by the way, which is trash. You shouldn't be looking at the market from 7 to 5. That's ridiculous. Okay. But I didn't know any better. But the point is, instead of doing that, you can just back test. And you can back test for 1 hour and trade 10 days in a row instead of looking at the market live for 4, 5, 6 hours and only trading that one session and getting that one session in. You can get in 10, 15, 20 sessions. Okay. And that's why I'm just showing you guys how to back test. You go to the beginning of the session that you're going to trade for that pair every single day. So NJ, we're looking at, again, 6, 7, 8 o'clock. Okay. And then we're going to go to the next day. Okay. 6, 7 o'clock. So this is like 6, 7, 8, 9 o'clock. Let's probably press it one more time. Okay, cool. This is I'm sorry. This isn't even the 1 hour chart. That's the 45-minute chart. Okay. Let's check it. Okay. So now, again, you just do your top-down analysis. Look at the daily, right? We know this was a weekly level here. Go to the 4 hour, right? You kind of start to go through and filter through all the higher time frames to see what you can uncover. Like, okay, does this look good? Does this look like a sell? Does this look like a buy? And what you're going to do is, by studying this pair enough, you're going to realize the tendencies that it has. I don't trade. I haven't backtested NJ like that. It's a pair that I trade, but I kind of know the tendencies pretty well, but not perfectly. It's not like my main pairs, but it's a side bay. It's side piece. Okay. So she's all right. She's okay. All right. But it looks like she's going to drop. Kind of, let me see. We have like 1, 2, 3, 4 ways. I wouldn't be surprised. I would not be surprised if it, and honestly, I don't know what's going to happen, guys, but I would not be surprised if it even pulled up here and then drop more. But it looks like it's going to drop to me. That's what it looks like. That's what it looks like to me. Depends how this next candle closes. Let's see. See if it pops up. Let's see. Okay, pops up. See, I'm even wrong on my back test. Maybe it's stupid bullish right now. Let's see. On the 4 hour. Yeah, I guess the 6 hour engulfing was really big there. The 6 hour engulfing was pretty big. I mean, so guys, you're gonna realize, like, trust me, even me, I don't get it right all the time. Okay. Like, and NJ isn't a pair that I really trade, right? I do here and there, but you gotta so for one, you gotta remember back testing is harder than live trading. Number two, it's gotta be a pair that you really like to trade, that you're gonna trade consistently. NJ's kind of like a side piece to me, whatever. So you gotta understand the flow of JPYs. JPYs, when they trend hard. That's a tendency of JPYs. When they trend hard. So I'm not surprised that, hey, whenever this was like, well, a couple weeks ago, NJ just shot up like crazy. Nah, I'm not surprised. Okay, I'm not surprised. So I'm just saying, so you're gonna learn things from losing. Like, you're not gonna learn from winning on backtesting, right? So you're gonna start to piece things together, like just how I lost there, really quick analysis. I'm like, okay, I think it's gonna drop. And then I'm like, oh, okay, it popped up. I'm like, well, it is a JPY. And you're gonna notice, like, JPYs trend hard. Like, they trend hard when they trend. And you're gonna realize that, because when you're gonna try to sell at a higher time frame resistance zone, it's not gonna give a crap about it. Okay. Like, this is definitely gonna go up even more. Like, it just retested the zone and now it's about to pop up. So you're going to realize these things, and then when you see it in live trading, you're going to be able to um react and realize, like, okay, I remember seeing this when I was back testing and I lost when I was back testing. So now, okay, I know what to do. So when you see this in live, you're gonna be like, you know what? Let me be careful, because when I was back testing, it didn't respect resistance and support on higher time frames when it was trending hard. You're gonna see these things. These are the lessons that I can't teach you, that you have to see just by backtesting a few times a day, or not a few times a week. I wouldn't say a day, even if it's just 1 or 2 days a week, or maybe an hour or two. These are the small things that you're gonna pick up. These are the small things that you're gonna pick up. Okay, like, just me backtesting with you guys a little bit on NJ. I'm like, I pick up something here and there. You know, like, that's what you're gonna do. So again, just going back to um, the best way to master your technicals, backtesting. All right, and I know I kind of went off a crazy tangent, and it was very long, but that's really the best way that you're gonna level up. Okay, that is the best way that you're gonna level up. All right. So the last part, before I go into like Q&A, and we can just talk about whatever you guys want to do or talk about, okay? Because obviously the backtesting part was very long, right? But again, nothing will replace that time in the market and experience like backtesting. Nothing, guys. Whether you're right or wrong. And you can see, like, I'm not that accurate on backtesting. I mean, at least for that pair, it's not my main pair. So if it was like Nas or AU or AJ or EU, yeah, your boy would be mad accurate, because those are pairs I've practiced on, or gold I've practiced on, right? But that even comes to show you that even when you're at my level and your signals are really, really good, when you back to certain pairs, you can still be like 50-50, like, win half, lose half. So think about that. So think about the fact that, I'm still a really great trader, and when I back test, I'm still not that accurate. So don't beat yourself up when you're not that accurate. But guess what? When you get really good at back testing and you get accurate at back testing, then guess how well your real trading is going to be. Think of it like that. Okay. So the last part, really, guys, the last and hardest part to master when you're kind of a six-figure trader, or going to, I would say going into becoming a 5-6 figure trader, then obviously even to the 7-figure level, the hardest part really isn't the technicals. right? The hardest part isn't managing your trade. Some of you guys already know this, but the hardest part is you. Okay. And so I really love this quote. You know, it's a quote that I kind of live by, right? But mastering others, right, is strength, but mastering yourself is what makes you unstoppable, right? Like mastering yourself. And that's kind of the last part of trading is like once you master the charts, you master your risk management and entries, compounding, all that, then you have to master yourself. And that's just all internal. That's just battling your own emotions, and that's the hardest part to master is yourself. Is making yourself disciplined, making yourself follow your plan properly, making yourself take only good risk rewards, making yourself not get in the trade and not be impulsive. Like that's the hardest part. That's probably the hardest part for y'all right now, and y'all haven't even mastered the technical part. So, which is, and let me tell you, once you master the technical part, it's gonna get worse. Like, let's say you're like, if you win every trade, let's say you're winning like 90%, right? Let's say you're doing super good technicals, you're 90%, right? Then a lot of you guys are like, well, if I'm winning 90%, I can like over leverage on like 90% of my trades and win all my trades, which yeah, you can. But then that 10% that you lose, you're gonna blow your account. So it's like battling all those emotions, right? So there's a lot of details that go into, I would say, mastering yourself and hitting that 6 7 figure level. So it's just so much to go over, guys, that I had to break it up into a part two because it's getting too long and it's too much to go over. But I will say it's a lot. So I will be doing a part two. So this is actually the part one. So I will be doing another webinar next week, and it will be the part two of it. And I will go into a lot of different aspects that I didn't go into. Yeah, because it's a lot. It's hard to put into a 1 or 2 hour webinar. Hey, what does it take to be 6 7 figure trader? It's like, what? What the? It's so much. It's like when I think about everything I've learned over the past almost 7 years, I'm like, I can give you about 100 things, and I gotta boil it down to 4 or 5, and then kind of gotta explain those. So just so you guys know, there is a part two, and I will stop the recording, because it is like super, super long. But hopefully you guys got some value out of it. Hopefully, even if you just picked up 1 or 2 little things, 3 little things, I know that there was a lot of info and just so much going on. So hopefully you picked up just something that's going to make you better. But stay tuned for part two, because part two will be next week, like sometime, I'm not sure. I don't know if it'll be midweek or be Friday. I don't know. But it will be next week, okay? And I will have some special stuff for you guys next week as well. So, yeah. All right.